Hey, what's going on, everyone? So this is going to be a four-part series. So this will be part one, where I'm going through different concepts of Year 11 accounting. So this fulfills a bunch of roles, probably best viewed. Um, if you're going to be doing a recap from Unit 2, like a recap of Unit 2, but looking back into Unit 1, or alternatively, if you're new to Unit 2 and you haven't done Unit 1, this sort of goes away to catching you up. So we're going to be doing different bits. I'll be talking through different aspects. So you're going to see on the screen, and I'm going to have to play with settings as I talk, but you're going to see some transactions. So that's going to be part one today. And we're going to be looking at the different journals. So cash receipt, cash payments, sales journal, purchases journal. I'm going to explain how those work. We're going to be looking at some transactions. I'm going to be showing you how we total things. And very much this is a recap of Unit 1. So anything here was what we did in Unit 1. There's going to be no Unit 2 stuff. So there's no going to be discount revenues, discount expenses. They're going to be separate videos of themselves because we're going to be looking more at accounts payable, accounts receivable then. So that's where that's going to come in. For the second video, we're going to be looking at these reports and we're going to be putting them into the cash flow statement, income statement, balance sheet. So we're going to look at how do these interact. We very much did this in Unit 1. Unit 1. Some of Unit 2, the income statement we did last SAC, but still a very good catch-up. Video 3, we're going to look at characteristics and assumptions, and then Video 4, it's going to be the balance sheet, so more about assets, liabilities, and so on, and then some definitions and where that all fits in. We've also going to do some sample theory questions, so we'll go from there. So I've got the script on here, so that's what I'm working from. So that's where we are here. So I'm just going to flick the page. So we're going to see how this goes. So we're going to start with the explanation. We're going to start there. So let's bring up, we can see I've got a working doc revision template. I'm going to have this on Compass. So you'll have this document. You can look through it. I'm going to have a blank one if you want to test yourself. And I'm going to have a full one you can sort of work through, okay? So our two cash journals are the cash receipts journal and the cash payments journal. Now, date, details, receipt number, or date, details, document number, all very self-explanatory. I will talk about the details a bit more, but for the date, as you see, we only need to put the month in once. So if it was August 1st, we would go 1, and then if the next one's on the 4th for cash receipts, you can just go the 4th and the 12th. Pretty self-explanatory. Receipt will just be at the end, so it will be receipt 10, whatever. Okay, I'm just going to also be doing a little bit of formatting on the go, so you'll see that play out as well. We've also got the accounts receivable, so any money I'll skip the bank on purpose, don't worry. Any money we get from the accounts receivable, that will go there, and in the details we would put the accounts receivable we received this from. So for example, Jim's Mowing, if they paid us money that they owed us, that would be in the accounts receivable. We've got sales, very much any cash sales you make, this will belong there. Just also doing that. Sundries is anything that doesn't have a heading, and GST. The things that would go in sundries are things like owner contributing cash, and that's capital contribution. We do have a transaction of that. And GST, anything that incurs GST or we receive GST will go into here. Now, subtotaling. We actually subtotal the bottom of every column. So this whole column will add up to the bottom here. That'll be in bold. Same with sundries, same with sales, same with accounts receivable. Now, the basic way this works is accounts receivable plus sales plus sundries plus GST will equal your bank. And I'm actually going to change the color of the bank just so we remember that. And I'm going to make that a green, like a weird green color. That is not a good color. I think I might highlight it. I'm going to highlight it. So let's highlight that like a bright blue. Okay? And the thing is, I should be able to add up this whole column to get my bank. I should also be able to add up the subtotal of the GST, sundry, sales, and accounts receivable to get the same number. So our final answer, or our total inflows of cash, will be in this column. The cash payments journal operates very similarly, except it is out, and it's very much anything that constantly happens or consistently happens quite frequently will get its own heading. So accounts payable, accounts payable, drawings, wages, GST would get its own subheading, while sundries would be its own thing. Stuff that we'd consider as sundries would be if we bought something like a car on cash, because there's no subheading here. Likewise, we would be adding the subtotal, so everything of accounts payable plus drawings plus wages plus sundries plus GST, add it all together, total will go in the bank. You add these columns down, you get your final answer here, and if we do all the subtotals, we'll get a final answer for bank. Simple. And then we've got the sales journal and purchases journal. So the sales journal and the purchases journal. Okay, sorry, I'm just a bit. That's Arial. I'll change that. So the sales journal acts as any credit sales we make. And this time it's the sales or the fees that we make on credit. You add the GST and you get a total for the accounts receivable. So sales plus GST equals total accounts receivable. We're going to highlight that as well. So the subtotal of sales and the subtotal of GST would go on the bottom here. And if I add this to this, it will also equal the total accounts receivable. And we can double check that. Very much the exact same for purchases journal, where we put that info all in. Very much the same, the exact same concept. Now, what do we do? What goes in the accounts receivable? Quite simply, it is the name. That's all we do. We put the name that goes in there. So, for example, if I make a sale to, I don't know, Devon's Donuts, that would be the accounts receivable. If I made a credit purchase of inventory to, I don't know, Harmon's, I don't know, hair salon, I don't know, or Harmon's hair supplies. That makes more sense because it's an actual piece of inventory. That would go there if it's on credit. If it's on cash, that's not a concern. So if we buy inventory on cash, we would just write inventory. Okay? Just a reminder there. So that's what we're going to be doing today. So those are each of them. So purchase journals and sales journals are credits, and I will talk about the invoices at the end. Meanwhile, cash payments, cash receipts, as the name suggests, going to be cash. I'm now going to go through the transactions. So we've got unknown business. They started on January the 1st, 2025, and provided the following information for its first month of operation. So it goes from January 1 to January 31st. So let's input each of these and we'll build from there. Now, the additional information is what we're going to refer to in part 2 when we do our reports, okay? So no need to worry, we will come back to that. So let's get a split up. All right, so we're going to try and get this on one page. All right, that's all on one page. Let's make this a touch bigger. Okay, that looks good. All right, so on January 1st, the owner contributed $10,000 in cash to start the business, receipt 001. Now, quite simply, we just go Jan 1. We look here, we see it's a capital contribution because the owner is taking part of their resources and putting it into the business. And that's not accounts receivable, that's not a sale, and it's not GST, so it needs to be sundries, and we just go 10,000. Now, sundries, we have to add all these up, we see it's 10,000, and that means the subtotal is bank, and that's 10,000. Then we go receipt and we go 001. You can also go receipt 001, but they're all receipts. So I'm just going to leave it 001 if that's all right. But if you want to make it bigger, then there you go. And the detail is capital contribution. I'm going to be a bit shorthand, so I'm just going to call it capital cont. But if you were to do this, it would be capital contribution. Obviously, you can write a lot smaller than I can type. On the 3rd, we purchased inventory totaling $4,000 plus GST from Doug's Drills invoice 100. Now, we purchased inventory. We didn't sell it, we purchased it. So that's the purchaser's journal. It's on credit, so we go Jan 3. Who is the accounts payable? It's Doug's Drills. We go invoice 100. How much is the inventory? It says right there 400 or 4,000, sorry, and plus GST. So we need to add GST in. Now GST is 10%, so we just go 4,000 times 10%, or we cross a zero out and we see it's 400, and then we add them together and it's 4,400. Alternatively, we could just go 4,000 times 1.1. So either or, not an issue. And that's that transaction done. January the 5th, we paid rent for the month of 2,200, including GST, check 200. So we go 5th. Oh, we paid rent for the month, so that's a cash payment, because we paid it for the month. It includes GST and it's a check. If it's a check, it means it's cash. Jan 5, and we go rent. And the doc, check 200. There we go. How much? 2,200 including GST. How do I get GST out? Quite simply, whoops, I'm going to have to swap just quickly. I might put... I will, next video, the calculator will be a bit more tucked in, but for the time being, we'll just go here. So, calculator here. I will flip to the calculator in and out. So, 2,200, including GST. How do I get GST out? Well, quite simply, if we add GST in, it's times 1.1. So, if we want to take GST out, it is divide by 1.1. And we see that's 2,000. So we see rent was worth 2,000. Now there is no subheading for rent, so it needs to go in sundries. And that's why it's important for details to write what it is. Now it includes GST, so we're going to put GST back in. We see 2,000, 10% of 2,000 is 200, and the bank is 2,200. Simple. We got the 6th. We purchased a second-hand van worth 3,300 plus GST, check 201. So we go here, we go van. Doesn't matter if it's second-hand, we still got to put the amount in, check 201, and we see it's 3,300 plus GST, so 3,300 plus GST means we multiply by 1.1, and it will become 3,630. And we see plus GST, but before that we'll put the non-GST amount, 3,300. And the GST, 10% of that is 330. So the van is worth 3,300. That will go in our balance sheet. Meanwhile, the GST would go down. We've got the 8th. We made a cash sale for the week, cash sales for the week, there we go, English, I'm good at it. Cash sales for the week total 1,400 plus 140 GST, receipt 2 to receipt 7, so RECO 2 to, let's get the line out. So I'm just putting my purple LEDs on. There we go. I mean, I probably could do that. So let's just try. Oh, goose. So I'm just trying to get this to line up. There we go. You love to see it. You love to see me just fiddling with this. Now, 1,000. Where was it? 1,400. GST is 140. Add it together gives us 1540. Put the date in. It was the 8th. And you can just go sales. For this one, detail's not that important because it's not going to give us any additional information. So you can just repeat the amount here. Now, you might be thinking, why don't we write cash sales, Mr. Donnelly? Well, plain and simple, you don't need to write cash sales because it's the cash receipts journal. You don't need to. It's already there. It's already implied in the name. So that's just a little bit interesting stuff there. On the 10th, we paid $3,000 to Doug's Drills for previous purchase of inventory. Check 202. So let's do that. So we have a look. We see it's a cash receipt. Check 202. We go the 10th. We go Doug's Drills. Now, it's Doug's Drills because it's an accounts payable. You need to put the amount in. We paid $3,000. We don't include the GST for one simple reason. When we did it, we actually included the GST on here. Okay? Just a little fun fact there. And we can see that 3,000 equals 3,000. On the 11th, the credit sale was made to Tim's Tools worth $3,300, which includes GST. So we go 11, we go Jan 11, we go Tim's Tools, it's invoice 001, sales, we look at the sales and we see it's 3,000, including GST of 300, the total accounts receivable 3,300. We then move to the 13th. We purchased inventory totaling 1,500 plus GST on check 203. We know it's a check. Oh, sorry, because it's a check, we know it's cash. There we go. Got it in the end. So we go check. We go down, and we go 13. 13 inventory. There's no inventory column, so we need to go into the subsidiaries. It's 1,500 plus GST. Remember, 10%, 150, and that makes it 1,650. On the 15th, cash sales for the week total 1,100 plus GST. Receipt 8, so receipt 13. We go back up and we go, oh, it's similar to this transaction. So we'll just copy it through, replacing the new numbers in. Because honestly, let's at least try and make our lives a bit easier. And we see the amount was 1,100 plus GST is 1,210. There we go. On the 17th, a credit sale was made to Y Records worth 5,500 plus GST invoice 002. So we go down, we have a look, we go to our credit sales on the 15th and we go Y Records invoice 002. We see it's 5,500. We've got to add GST, so for plus GST, you've got to add it on, and we just go 10%, which is 550. And then we just add it together, and it should be 6,050. And we'll double check that one. So 5,500 multiplied by 0.1 gives us 550. Then we can go plus 5,500 is 6,050. We can double check by going 5,500 multiplied by 1.1. Look at that. Numbers work both ways. So we see that does indeed add up. We've got the 17th where the Wait, that was the 17th. Was the 17th. My mistake. So we're going to go back. We've got to do the 15th. And we see, oh no, I've done the 15th. I've done the 17th. I just put the wrong date in. That's why it's important to do your dates one at a time. On the 20th, though, we received 1,500 from Tim's Tools. So we go the 20th. We received it, so it's a receipt. And we see it's receipt 014. And Tim's Tools, if we're not sure, we can check our sales journal and we see, they were an accounts receivable. They owed us money. So that is clearly an accounts receivable. How much was it? It was 1,500 and no GST because we did their GST back here. They're just paying us back now. And you can see that, my nose is a bit itchy, 1,500 because bank equals accounts receivable plus sales plus sundries plus GST. Yep, checks out. Now, for the details, like the accounts payable one in the cash payments journal below, how they put Doug's Drills, we need to put in the accounts receivable we received this from, which was Tim's Tools. On the 22nd, we paid wages for the month of 2,500, check 204. If it doesn't mention GST, don't need to add it in. And so we go the 22nd, we go wages. We see wages has its own column. So we go 2,500. Bank needs to be 2,500. It's check 204. And we see that it's wages, so you can just put wages in. I think I just closed it. Okay, I closed it, but it's saved. Hooray. So I'll just get that back up. Yep, we're good. So we see 22nd and we go wages. And nice and resolved. So there we go. And now we've got the 24th. Purchase inventory worth 3,300, including GST from Doug's Drills. Invoice 156. Purchased inventory, it needs to be the purchaser's journal. And that will be, where was it? The 24th. And we go Doug's Drills again. Invoice 156. And it was 3,300, including GST. So let's get that out. 3,300 divided by 1.1 gives us 3,000. So we just go 3,000. 10%, 300. Add it together, 3,300. Fun fact, if it says include GST, you can just put it in the total column. More you know. On the 27th, we paid utilities for the month worth $270 plus GST. So let's go back up. We go the 27th. Utilities. Is there a utilities? No, there is not. So if there's none there, it's in the subsidiary column. Let's make that a bit smaller. And we would go, how much? 270 plus GST. So 270, 10% of that is 27. How much does it total? 297. And we can double check that. If we just go 270 plus 27, we see 297. Alternatively, 270 times 1.297 as well. So, whoops. And we go check 205. And you just put, because it's in the sundries, has to have one there. And that would be utilities. So utilities would be like your water, electricity, and so on. On the 29th, cash sales for the week totaled 2,200, including GST, receipt 15 to 20. We go to our cash receipts journal. We go the 29th. We go sales. Again, it's cash sales, so it doesn't overly matter, honestly. Whoops. And it's receipt 20. There we go. 020. There we go. And we see 2,200 including GST. Let's get the GST out. 2,200 divide by 1.1 will give us 2,000 in our main one, the sales. It'd be nice if the alignment worked. 2,002. Oh, jeez. What happened there? That's odd. You love to see it. Oh, because it created a mini tab there. Interesting. There we go. Nice and fixed. 2,200. Now we need to take out GST divided by 1.1. 2,000. Yep, 2,200. So we've got to take it out. It becomes 2,000. GST is 200. Total 2,200. Nice and simple. You could also just copy the rent transaction as well. Interesting there, because it's the exact same numbers. Now, on the 31st, the owner withdrew 2,100 cash. That is clearly a drawings. So we go to the cash payments. 31 drawings. So we put down what it is. Now, if you have a look, you see, oh, it's already drawings. That goes there, 2,100. And that is check 206. And we look at it, we go, it needs to add up. So there's only 2,100 there. Happy, happy days. Now, I'm going to remove all the transactions. We're going to remove the split. We'll go back here. We'll make this a touch bigger. We see we've put in all our transactions. So the last little bit we need to do is do a subtotal. So let's get the subtotals done. If there's only one in there, you don't need to really do anything over the top. So 1400 plus 1100 plus 2,000, and that's 4,500. Now, before I do anything else, I know that the GST will be $450. What tells me that is, if I look at all the GST transactions, I see the only time GST is taken in is when we make a cash sale. So it would stand to logic that 10% of this would be this. But we'll just do it anyway, just in case. And we see, yep, hey, I've broken it, 140 plus 110 plus 200. There we go. Computers are hard. And now I need to add the bank column down, or I can add the subtotals across. I'll do both. So we go 10,000 plus 154 plus 1210 plus 1500. Oh, 1500 plus 2200. And we see that's 16450. 16450. Now, logically speaking, if I deduct each of these, I will get the same number. So let's see if that checks out. So we go minus 1500 minus 4,500 minus 10,000 minus 450. Oh, look, it's 0. This means this is 100% correct. We now rinse and repeat for the cash payments journal, the sales journal, and the purchases journal. So let's just do that quickly. 3,000, 2,100, 2,500. Next, we would do our subtotals, and we see exact same issue. 2,000 plus 3,300 plus 1,500 plus 270 is 7070. That should be 707. Let's just double check. 27 plus, 27. There we go. 27 plus 150 plus 330 plus 200 gives us 707. Whoops, I don't know why I put a space there. Next, we go from there and we go, okay, what now? What do I do now? And we go 2200 plus 3630 plus 3000 plus 1650 plus 2500 plus 297 plus 2100. 15370. 15377. And I'm just going to fix it up as we talk, and we see that if I go minus 3000 minus 2100 minus 2500 minus 707, we see 7070, and we see it 0. We see, yes, everything adds up here. Hooray! And then we rinse and repeat across here. Now we see 8,500, 850, and that'll be 9,350, 9,350. And we can just do the subtotal here. There we go. This one, oh geez, 7,000. What have I done? Oh, I hit the num lock. That's why. 7,000. And, there we go. What have I... it's centered it. That should not have been centered. There we go. There we go. 7,700. 7,700. Boom. Simple. Done. So that's how we do our journals. Thank you for following along. It is a long video, but this is made to be viewed multiple times and you sort of catch up. All this will be on Compass, and if you've got any questions, please, please, please ask. It makes a big difference. Otherwise, well done, and I will see you for part 2.